Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
Well, let's start with stocks on Wall Street. After the massive declines we saw over the past few sessions, finally a tick upwards on the Nasdaq and the S&P 500. The Dow, though, lower again. Investors, it seems, are waiting for those inflation numbers due out on Wednesday in the U.S. What's the story today in the global markets?
U.S. stocks swung between gains and losses on Tuesday as uncertainty over inflation, interest rate, and the economy continued to weigh on the market. The Dow Jones Industrial Average fell for a fourth straight trading session, hitting a 52-week low. It closed down 0.3% on Tuesday. The Nasdaq Composite Index, on the other side, climbed 1%. U.S. investors, as you said, turned their attention to Wednesday's report on consumer prices and the possibility that inflation may be peaking and stocks rebounded again. The yield on the benchmark 10-year Treasury note edged down to 2.99% from previous 3.08% on Monday. Or major Asian markets gained today as U.S. President said he could drop some of the tariffs imposed against Chinese import to help control U.S. inflation. Nikkei gained 0.2%. Shanghai and Hong Kong both gained 0.8% and 1% respectively.
Well, here in Korea today, Professor, stocks were a bit of a mix. The KOSPI up and down during the session, slightly lower in the end. The Nasdaq, though, quite a bit higher today, and the exchange rate, of course, still elevated. Tell us about the domestic market, Professor.
I just said, Devin, there was a huge mix between KOSPI and Nasdaq today. Today, the benchmark KOSPI retreated 0.2%, but Nasdaq added 1.2%. In last 7 trading days, including trade, KOSPI has been continuously dropped with accumulated 3.6% negative return. Domestic investors became more concerned about intensifying inflation, contractionary monetary policy with higher key interest rate, and geopolitical issues of Ukraine and so on. So the majority of domestic investors believe that a certain level of market adjustment to downside is not avoidable. Along with market turbulence, large cap stocks were mixed today. The second largest cap, LG Energy Solution, lost 0.5%, and Samsung Bio, Samsung, SDI, POSCO, KB Finance also dropped today. In KOSPI market, foreign and institutional investor led market drop with 380 billion won combined net sales.
Well, Professor, zooming out a little bit, the Korea Development Institute in its latest report for this month says there are growing downside risks for the Korean economy. The impact of the pandemic is reduced now, but overseas there's the war in Ukraine disrupting supplies of commodities and rising interest rates in the United States. What do you see in this report from KDI, and what's your view?
According to KDI's recent report, Korean economy faces increasing downside risk as worsening external conditions weakens investment and export despite a moderate recovery. But KDI at the same time emphasizes Korean economy remains on a recovery path following the easing of COVID-19 social distancing measures. KDI also says worsening global supply chain bottlenecks and high international material costs have put a shock in Korean construction and corporate facility investment. And they also added that additional risk to Korean economy would be increased financial market volatility stemming from the U.S. Fed acceleration in the interest rate hikes. To keep step with U.S. Fed, Bank of Korea is highly expected to raise the key interest rate up to 3% level until the end of the year.
Well, finally, Professor, the new government in Korea is going to submit its first extra budget this week to the National Assembly. The focus, of course, providing relief payments to small businesses. But there is concern about what even more money being put into the economy will do to inflation. Consumer prices in Korea have risen less than in some other countries. What's your view on the extra budget and inflation?
Even with 4% economic growth last year, Korean economy is not fully recovered from coronavirus pandemic yet. And the hardest hit by the pandemic is self-employers and small business owners in service sector. So far, Korean government supports on self-employers and small business owners is about 35.1 trillion won, but it is far below their business losses of about 54 trillion won. So it is necessary to provide a certain form of economic relief to these people. President Yoon's government plans to provide cash support through an extra budget of about 35 trillion won. The details of this plan and how to finance this project will be announced sometime late this week. Actually, during the election campaign, President Yoon promised to spend about 50 trillion won to compensate the self-employed for their losses caused by COVID-related curbs. Altogether, government fiscal stimulus should be well harmonized with Bank of Korea's interest rate hikes.
Yeah, that's going to be key, it sounds like, Professor. Well, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much, Devin.